Alright guys, good afternoon, welcome to the day debrief on what is another day of action created by story relating to Ukraine and Russia, but also inaction relating to the story of Ukraine and Russia. So let me explain. What we've had throughout the day, and we know the story over the weekend, overnight, the nuclear threat that came from Russia dwarfed the potential of talks. And the talks that were discussed last week, the potential of some degree of surrender talks, were said at the time to not likely hold too much, as in there were low expectations. So the nuclear threat over the weekend is pretty serious deal. What we've now seen since then, and this comes later on this afternoon, and so we have seen a little bit of breakout since that point. Later on in the afternoon, we've seen talks between Ukrainian and Russian officials have gone on. They have not completely collapsed, and there will be more talks tomorrow or in the coming days. Arguably, this is pretty positive and can be attributed to the equity move up that we have seen going into the end of the session. Question now is, can it stay up there? So there is a bit of action going on. We've also seen Ukraine formally requesting to join the European Union. Now, this may not make the talks particularly helpful. It may help Ukraine if they join the European Union, because Europe will then naturally have to kind of defend Ukraine. There's a whole political aspect there of how quickly Europe going to be willing to allow Ukraine in, when that implies they're going to have to fight on Ukraine's side. By the by, on all of that, the time it takes to get into Europe is a extremely long time of audits and jumping through loops, etc., hoops, etc. Getting out is completely different. So that is something of interest for the future. May well have a detrimental impact on any talks ongoing. So that's where we currently are. In terms of action for the day, it's been a tough one because of the size of the gaps, and I'll show you particularly gold and oil illustrate this best. But with these large gaps, you will often have a situation where much of the action on the day is taken away because you get such a big gap. For example, Bund closed down here around about 66.20. We open all the way up at 67.04. So about an 85 tick gap. Big IB swings us back down and we're then essentially stuck. The trade that I was suggesting this morning, or one of the opportunities this morning, was for this look down to the VPOC from yesterday. Because you had all of this volume on Friday jammed down towards the low, could we get then attracted back down? The hard bit with a trade like this is the initial balance took a lot of the opportunity away. What is interesting to point out here is the initial balance today and Friday, both of which open gap up and then have a drop in the first half an hour and an extended drop that then reverses in the second half an hour. Keep your eyes open for that tomorrow if we get any kind of gap up. With anything like this, it's not to say, oh yeah, and in fact, you actually got the same over here as well. It's not to say, assume that this will happen. It's more about looking for something different. If this doesn't happen, what does this tell you? How could the market react? If this doesn't happen, you don't get this extended initial balance, maybe you've got a little bit more scope for movement and less of a failed kind of move through the IB. You see here today, yes, we get a break, but there's lack of continuation. Same story on Friday, breaks the IB and then consolidates lower. That's what creates this kind of fat bottom, sort of ski slope type profile. I think is probably the best way of referring to it. So really your opportunity in Bund comes on the break of the IB. But because it's a large initial balance, this takes away the willingness to go for it because your expectations are low. Granted, you've still got the scope of this move down here, so there is some value in taking this trade on. It doesn't materialize, and that's partly then the problem, that you get this kind of little flag that forms on a half-hour chart. Looks good then for the move down, doesn't materialize. We create a bit of a ledge at 50, which then gives the chance for the move back up. So, you know, opportunities reasonably limited in Bund. I think it's one of those where you'd expect it to go down. It doesn't do enough to allow you out of the trade, and then doesn't really give you a great deal on the way back up. Arguably, playing through the ledge into the IB, you can then try and play back up the range. We have now created a bit of a, excuse me, a fat top profile, which again, if we don't break through this soon today, does suggest that you have got, once again, a kind of disappointment counter move back down the range. So, slight confusing. What is interesting about this is that the Bund actually went up as the equities went up when that story comes through about the talks in Belarus between Ukraine and Russia finishing without them completely falling apart. Right, over to equities then. These were perhaps the most tradable today because the commodities took all the opportunity away. The bonds took a lot of the opportunity away with the initial balances. The equities actually provided something a bit more tradable because of where they started off. Euro Stoxx predictably traded between 85 and 24, exactly what I was talking about this morning. It did that pretty much all day. So whilst opportunities weren't abounding, it was also a situation where you could say, well, reasonably clear where the opportunities lie, and you can then trade around those. So what we ended up with is this little trade in this little box. You had the chance, hard to buy straight from the open, but you got the chance to sell. We come back down there, failure to go lower, you can then play this straight the way back up, and then you get another shot back down. With each of these, I think a really important thing on a day like this, it's easy to say sell here, cut and reverse here, sell here. The problem is, where'd you get out of this? Well, for a loss, surely, on that basis. A more optimal strategy, sell here, buy here, sell here, all of them get out in the middle of the range. This way you guarantee yourself an exit. Yes, you would perhaps be able to make more money in an alternative scenario, but in fact, if you look at this, you play this to the middle, you play this to the middle, you play this to the middle, 3 winning trades. If you play it as a cut and reverse, yes, you get that, and then you lose. So arguably, you're not that much better off for trying to play the full up-down range. And also you have the frustration that you are going to miss this. As you play them all to the middle, you're not in a position as you start to approach the highs. You get that story, that gives the impetus for the break, that takes you up into the cave from Friday, which then allows for the continuation up. First targets those single prints. Beyond there, you're then looking up towards sort of 40 and 64. So we've got the scope now. You can see from the 40s, that's where the volume is, but really, perhaps the easier target is then that low 50s area for stocks. So equities, I think, perhaps the most tradable in that it allowed you reasonable points to then try and play back and forth. It also then does give you a breakout on the news. So it gives you a reasonably clean move on that one. Let's move forward. Same story with the S&P. So with the S&P, you get the gap down overnight, the initial move on the gap down, and then really a pretty stable day. This is a full session S&P profile. After that gap down, we failed to really get through certainly the time, if not the volume, from Friday. So that's then what takes us down into this little area. We get that little spike down, market stabilizes, doesn't really give you a great deal of opportunity here. And again, late on, you get that break move. What's now important is what we do up here. You see it from the end of last week, from Friday, and it becomes not far off the VPOC of the week. Tons and tons and tons of volume at 43.80. Whether we can get above and stay above there tonight is now going to be quite a significant point. And I will just bring the ladder in because I'm going to show you that a little bit later on today. So that's what we want to be watching out for. Can the S&P get up above 80? If it can, this then does start to look like the invasion reversal that so many people are talking about could be on. Get above 80 and then we can start to think about the reverse all the way up through the range, looking through this little zone here. So that's 44.23 up to 68, and then you get above there and you're looking at 45.14 and then onwards all the way up towards 73. So how we trade around the 80 is going to be quite an important thing today. Do the sellers win, the people who stopped the move going up on Friday? Can we find enough buyers to get us beyond here and allow them for that further continuation towards the upside? We'll go and have a little look at this in top trades. I actually didn't see the break, so it'll be interesting to see how it does it. And also then you get to see sort of, how you might want to try and think about it. Ultimately, you're getting up to the highs of the week, you're looking for that break. So we'll go and approach that in a little while. Right, this was the issue with commodities, that they put in very large gaps, ultimately within range, which, as I've talked about many, many times before, with these gaps over a weekend, it takes a lot of the opportunity away from the day in terms of clear direction. It doesn't mean there is nothing going on. Ranges are still big. You look at the range of the day in gold so far, and you're looking at around about 400 ticks. So it's not a day that's lacking range, it's lacking direction. This makes it tricky because you now have a volatile day which is going up, down, up, down. Makes it hard to decide what exactly you want to do, and then you factor the news in, equally makes this pretty tough. So you have to kind of treat these days as, to a degree, a kind of scalper's market, that you're going to wait for little reference points, trade smaller opportunities. So for example, and I appreciate that this is the middle of the night, but once you have this massive spike up, you've got a gap up of the best part of 300 ticks, gap up 300, spike up another 150, whip back down and reverse then another from the top to the bottom, another 300, the market's all over the place. So then what you're looking for is, right, where does it stabilize? And this is kind of treating the action as a bit of an opening range. Now you can start to pick points where you can say, okay, well, let's see what happens when you get back down here. Little false break, there's an opportunity to play the market back up. Test up towards this area, which is also the open, there's a chance to play back down. And it looks very simple. You go, oh yeah, just buy it here, sell it here, nice and easy. It's not massively easy because this doesn't really give you too much of an opportunity to sell. It doesn't reach the open, it doesn't reach this high. But what you're doing is you're looking and saying, well, there's a point up here where if I'm offered the chance of some kind of short-term sell, I can have a go at it. So it's where you're then getting onto a short time frame. This is 5 minute, get onto a 1 minute chart. Look for those little bits of action, those little reversals, little continuation patterns. You're not looking for lots, but what you're looking for is, if this is going to be a market that is going to swing around all day long, you're going to have opportunities. Just this range here, for example, doesn't look much, but there's 100 ticks worth of range. Bearing in mind, this is a 5 minute, 80 ticks down, 80 ticks back up, 60 ticks down, 60 ticks back up. There's a lot of opportunity in this. Perhaps the best one was the European Open break of the low, rip down for the gap. That's perhaps going to be your clearest opportunity. And then also on the exhaustion move, the massive spike of volume, the break the block, reverse back up the range. Either, well, realistically back to mid-range, not to say, oh yeah, we'll go back up there, because from here, we've not come anywhere near going back there. So somewhere back towards the middle of the range, is more of an appropriate target than trying to play for the full move up. It's an easy one to say, or an easy one to call. It's not an easy one to do. Same story with oil. Massive gap up, so you get a gap up of around about 300 ticks in oil. A open spike up, which gives you around about 400 ticks on the open in the first 5 minutes. Huge spike, opportunity's gone. And so you then end up with a day that does put in this just like constant chop. The first attempts down in the early morning provide a bit of support for later on, giving you this little ping back up. We get this trend, this sort of compression throughout the day. But you look at it on an hourly chart, sorry, not an hourly, a half hourly chart, it's all over the place. Red, green, red, green, red, green, red, green. Large, thick bodied candles which have zero continuation to them. This is what makes for a tricky trade if you're not aware of the situation. If you recognize the situation where you have these very big gaps and then explosive moves, this very quickly says to you, limit your expectations of direction. You're still going to get movement. You know, we're still trading in a 100 tick range here, up, down, up, down. There's still opportunity, but if you're expecting to see some kind of directional move, you rarely get it. Essentially, all the action's been done here. So if you're a buyer and you got forced in here, well, your job is done. You have done your business, you have bought. Outside of that then, it comes down to a question of, right, well, what can anybody do now? We've had a big gap, which makes people question whether they really want to be long or really want to be short anymore. Some people have acted on the gap, giving us 400 more ticks, and now everyone's got a question, right, what do you do from here? This naturally leads to a market where people are more passive, people are less clear on where to go, because all of the action's already happened. In terms of volume, the volume done in that first 5 minutes is around about 5 times what you would normally expect. So that gives you a clue as to the desire of people to act early, which naturally then reduces the ability of a market to keep going. Right, quick look at this volume break then. I'll bring the S&P in. We know we've been seeing a lot of volume trading up at 80. So you're going back up there. We've traded there Friday. We've done loads of volume up there. We traded there beginning of last week. We've done lots of volume up there. We've traded there already today. Done 220 contracts, not massive. So what we want to find out is when we go back there, how does it trade? What happens? So you could be going into this, and realistically, you're going to go into this looking for the break rather than looking for the reversal. Partly the news helps, and also it's another attempt at this same high. So, you know, effectively a poor high break. Add to the fact that there's clearly a lot of volume done here, so as people are holding this down, you're looking at this, right, what's going to happen? You've got 167 at the high. What's going to happen when we get there? How's it going to trade? And for me, my main objective here would be to try and hit into this as long as you get some pace. Ideally, stalls, there we go, just trades into it, hits it, reduces the size on the offer, reduces it again. That's where you'd want to try and get in. Now, it's not gone. It's not jumped straight the way through. That's okay because we were stalling at 78.5, but you've got to be thinking, don't want to see it back below here now. You want to see it jump. So it's not been brilliant. It's not the most convincing, but we have jumped. You put in a little pocket of low volume. This is all looking good. So now, if you're looking at this for the move up, what you're after is continuation. You want to see this keep on going. Take out the entirety of last week. Take all of last week's highs out. So basically all of Friday. Take that, keep the move going. That's what you're after here. But you're not seeing it. This is where the problem lies. If this was a situation where you have all that volume, you're looking for it to blast through and power on, great. We are above, but this is not really what you're looking for. You're expecting this to sort of really drive on from here. It doesn't. You get a couple of minutes of stalling. It does push on a little bit further, but it's not trading in a way that you'd be really comfortable with. What you've got to do then is you've got to say to yourself, right, well, what am I going to do here? Are you going to, if you're looking for the break explosion, you have to say, this is no good, I'm out, don't want this. If you're looking for the longer term continuation, then I think you're okay. You can say, right, I'm going to put my stop down below this low volume, below that 78.5 that I talked about a minute ago. As long as we're not trading down here, you can leave that and let that go. But aside from that, not really what you want to see. Always important to look at what happens in terms of what are you looking for, what are you expecting to see, rather than just simply looking at it and going, oh yeah, look, it's broken, it's gone. That's easy after the fact, but you've got to think about how it trades in the moment. Right, I'm going to wrap it up there, guys. Have a great rest of your day. I'll see you all on Wednesday morning. So until then, have a good rest of your day. I'll see you all soon.